Welcome to Unblocking the Chain. My name is Michael Printable and I'm your host for today. I have the unstoppable chairman of Jelly C and CEO of Catena Digital, Drew Bradford, joining me. Welcome, Drew.
Thanks, Chris. Lots going on at the moment, lots to discuss.
It's been a while, mate, since it's just been yourself and I. There's been a few podcasts in between, so good to have you back in the chair.
Absolutely.
The dynamic duo.
There you go.
Okay, we've got some big news today, so we're going to get straight into it. The big news is that Catena Digital has just received what we believe is Australia's first draft stablecoin license from ASIC. Today, we are also going to discuss Catena Digital winning the right to participate in the RBA and DFCRC's Project Acacia, as well as some snippets on Crypto Week. So let's get straight into it, Drew. On Friday afternoon, Catena Digital received the draft stablecoin license from ASIC. What does this mean for Catena?
The guys, they kept us waiting. The 4:47, the draft license came in on a Friday afternoon. So, we did have a couple of bottles of champagne on Friday night. We still got to get it formalised and do all of that. But I just think this is the start. We're going to talk about Project Acacia shortly, but this is like the start of, I think, where TradFi meets DeFi, as we say on our podcast. This is the start of it. We will be the first, and there are others, but we believe this is the first AFSL that's been issued to specifically issue a stablecoin. So this is the start of it. This is private companies or small businesses, not banks, going into this space, and this will all get tested out. The capability of the tokens, the capability of programmable money. And I think that's the big thing, that stablecoins allow you to insert an if-then statement in a payment. So they got so many applications, and it's the start of, I think, a tokenized digital economy, and we are right at the very beginning of that. This Crypto Week in the States, these three bills are a big deal. Project Acacia, the RBA, Treasury, DFCRC, all working on that. It's a big deal for finance in Australia and finance globally.
Yeah, I know, for instance, with Jelly C, we're tokenizing our funds and we haven't been able to do anything on the Australian side because we haven't had a live and liquid Aussie dollar stablecoin to be able to affect the transactions. So we are very excited to have it, and we're going to slice off a number of costs from our process as a result of having the stablecoin.
Absolutely, stablecoins just removed that credit exposure. They removed that settlement risk from every transaction, and what that means is that everybody will have access to institutional spreads. You won't be just dialing up and looking at those rates when you go to Travelex and see them on the wall at an airport, and they're 10% wide. You go to any of the banks and look at their FX spreads, it's 2 or 3%, because there's credit risk, there's personal risk, there's settlement risk. Once you've got downloaded a stablecoin and use a stablecoin, there is no credit risk. There is no settlement risk. You're swapping one digital asset, an Aussie dollar stablecoin, for another digital asset, a US dollar stablecoin, USDC, USDT. Yeah. Institutional spreads for everybody. And yourself with Jelly C, when we've got USDC, and then we're trying to hedge it back into Aussie dollars off chain, hedging digital assets that are on chain. There's a cost to buying and selling and hopping on and off chain. Yeah. This will, the next few months should see all those spreads taken out.
Yeah, it can take us 5 to 7 days to, to get fiat all the way into our, into our funds, and that's not including any debanking episodes or blocking by the banks. Okay, so when we're transferring money to, for instance, to the Cayman Islands, for us, we have Northern Trust as our bank in the Caymans. It's a hell of a process to get it all there. So,
stablecoins, no 3 p.m. cutoff.
That's exactly right. So we're very excited about the whole thing.
No, we are also very, very excited.
Okay, so moving on. In terms of the stablecoin offering, what's the action plan in rolling it out?
Oh, look, we're talking to a number of the local exchanges now. We want to get some clarification with their legal teams that everything's hunky-dory with the AFSL, and we have to complete the AFSL. Hopefully, over the course of this week, we'll get the full license. Then list locally, and then globally will be step one to connect to a couple of exchanges. And so that, and we've got an agreement with a market maker to provide liquidity. So that should be up and running as soon as one or two of the exchanges sign us up.
There's certain exchanges that you can start off with. I mean, there's certain exchanges that you can't deal with.
The exchanges will have to be comfortable with the AFSL and any relief that ASIC has given us. So look, we're happy to talk to all of them.
Yep.
Whoever wants to list us.
We want them all on there.
We want them all.
Yeah.
Absolutely. Oh, look, and you know, like there's an opportunity for a great partnership. You know, you've seen Circle and Coinbase have got a great partnership. Maybe we can strike one of those with one of the exchanges. That'd be great.
Yeah. So when I look at a stablecoin, I think of, for instance, Tether that, you know, has 159 billion US market cap. And then I look at Circle, 63.6 billion. And the success behind those stablecoins is the volume and also the market capitalization. So the market cap gives what is an element of trust that, you know, when you deal on that particular stablecoin, you feel like, you know, it genuinely is going to be, you know, held one for one.
Yep.
So I guess, you know, the question for you is how do we, you know, get the AUDM stablecoin so it has a larger market cap and, you know, facilitate the turnover?
Yeah, look, that's one of the things that people have to have. That's why it was very important for us to get the AFSL, to get ASIC comfortable with how we're set up. We bank with one of the big four, so NAB's been very kind to bank us, and so we have access to MPP, so we can transact quickly. All the money on deposit now is with NAB. Yep. For the stablecoin. And that will stay that way until it's clear. Like Australia's going to bring in legislation, probably not this year. I imagine we'll see draft legislation this year. Andrew Charlton has been a real champion for our cause, and he's the new deputy. Well, obviously with the election, he's the Deputy Minister for Science, Technology, and the Digital Age. There's a couple of us going down to Canberra to meet Dan Molino at the end of the month. He's the new Assistant Treasurer, and the regulation, payments reform, etc., will sit in his lap. So it'll be great to get a bit of guidance off him. I'd really like to see something draft, you know, by the end of this year. Then there'll be the usual consultation period, and so maybe we get something that gets voted on, you know, April, May
next year,
2026, yep. And then there may or may not be then a timeline before it comes into place. Sometimes it could be immediate. It could be 12 months. You're seeing in the Genius Act, they've got 3 years. Tether and Circle have 3 years to comply to the Genius Act. Yep. Should it all get passed. So we'll find that out. So for the moment, all money on deposit with one of the big four. So
okay,
that's where it is.
All good. So networks, which networks do you envisage Catena Digital or AUDM being on? Which one would be? You know, give us the first two.
First couple, we tested it and on mainnet with both Ethereum and Red Belly, Australia's own Red Belly. We've had Tim Bass and Alan Burt on the show in the past. So Sydney Uni and the CSIRO developed that one. So yes, we're definitely on that, and you know, it probably makes sense to talk to Solana and a few of the other people as well. Hedera is another one. All the chains within that are being used on Project Acacia are also Hedera and R3, which has got a little tie-up with Solana. Yep. And so we'll definitely look at those as well.
Yep.
But for day one, Red Belly and Ethereum.
Leads into the next question, which is, I guess, the type of transactions we can do with the stablecoin. Okay, so do you envisage us being able to do merchant transactions as well as, larger transactions like tokenization with the stablecoin? Can I buy my coffee and save myself 25 cents when I go down the shops?
Yep. Ideally, that's where we get to. You look at the merchant service fees that get paid in Australia. It's about $4 billion every time you tap your card, and sometimes you tap your card and it's 2% to tap your card, and you only earn 3.6 or 3.85 depending. The Reserve Bank didn't cut, so you only earn 3.85 for a year interest on your money, and it costs you 2% to tap it.
Yeah.
Obviously, with stable coins, you look at Solana, Red Belly, less than a cent to transact on those chains. So that's one of the things that's an obvious use case. The other obvious use cases are around, as we touched on, settlement for digital assets or even digital escrow. So you think if you're a big commodity house and you're buying commodities from the Congo or Nigeria, and you're thinking, I'm not really sure I want to send my money there until I know the goods are where I want them, you can put a stable coin into someone's wallet and say, when the goods get delivered to the refinery, you can then take the stable coins out. And if the goods aren't in the refinery within 28 days, 14 days, whatever you specify in the smart contract, the money comes back. Yeah. So digital escrow happens with stablecoins, and it's so simple to do that.
Yeah.
Whereas with fiat, that's a whole legal thing that you would have to do to set that up.
Yeah.
So speed, massive reduction in costs. And, the whole digital escrow
opens up a whole ecosystem of different things, doesn't it?
Yeah, it does. And you're seeing, so if you look at the development of stablecoins now, as you mentioned, there's $280 billion in total in US dollar stablecoins, and they're 99% of the traffic. That is historically, if you look at who have been the users, it's been people who haven't had access to US dollar bank accounts. Having USDT, USDC can effectively give them access to a stable currency, particularly if you come from a country that has a very illiquid currency that's not stable. You're in Turkey, Lebanon, Argentina, for example. To have access to US dollars has been absolutely fantastic. And that's why I think the turnover has been predominantly US dollars to date. When you look at think about this, there's about $60 billion a day turns over in stable coins. The foreign exchange market turns over $7.5 trillion a day. So we're not even at 1%.
Yeah.
Right? As things get tokenized, as with Project Acacia, tokenizing bank bills, annuities, bonds, there'll be a whole lot of stuff in Project Acacia that gets tokenized, and the project shows that digital payments are. As that happens, and this will happen at different rates in different countries, but then the stablecoin turnover globally will look more like the turnover of fiat.
Yes.
So the Aussie dollar's 6% of the global foreign exchange market.
Yep.
I see that over the next couple of years being 6% of the stablecoin turnover market.
Yeah. So if you're in Argentina, not Argentina, Africa's, South America's, for instance, and you're holding US stablecoin, let's say they've got over 260 billion worth at the moment. Why would you do that with Trumponomics? Why wouldn't you hold the Aussie stablecoin?
Oh, you
That's
would.
what it's going to come down to. A much better offering.
A much better offering. You and I have been foreign exchange long enough. When the Aussie's under 70 cents, we buy it. Exactly. When the Aussie's over 90 cents, you sell it. So
ship it in, turn the machines on, Drew, and buy it.
Yeah.
Okay, so that's the stablecoin. We've got a lot to cover today, so we're just going to leave that there. It's a big deal. I just want to stress for all the punters out there, the Aussie dollar stablecoin license coming through in its draft format is it's a digital moment for Australian crypto. So this is a huge moment for not just Catena Digital, but for all of the projects in Australia that require a stable coin to, help facilitation. Okay, so let's move on to Project Acacia. Drew, can you explain what Project Acacia is? Give us an idea of what it is and what the objectives of Project Acacia are.
So Project Acacia is about the tokenization of financial money market instruments. I've got to remember this. There are 19. I think there's 19.
24.
24. So there's I think there's 19 projects and 5 proof of concepts.
Yep.
So
Okay. Yep. Well done.
There's 19 projects where people are doing real trades, not just proof of concepts, real trades. We're one of the leads on that. So we've got a couple where we're trading a tokenized annuity.
Yep.
We've got a company issuing an annuity, and an investor will buy that annuity using our stablecoin, settle that, transact it, turn it around. We're trading also private equity shares in an unlisted company.
Yep.
That would currently have no liquidity. They will be tokenized and able to be traded. We're also participating in one of the other projects where we'll be switching our stablecoin for another bank issued stablecoin. So there's a bunch going on there, and I just see this as the way forward. Yep. I really think that once we get this proof of concept run, we won't go back. The whole concept of T+2 for bonds, T+2 for foreign exchange, all the processing that happens, the post-trade processing of foreign exchange transactions, bond transactions, and this whole clearing thing, it goes away.
Yep.
It's gone with blockchain.
Yeah.
So once we've shown how it's done, and it's the RBA that's doing it, Treasury's involved, the DFCRC's involved, ASIC and APRA are at the table. This is not a bunch of kids in a garage playing around with Bitcoin when it started.
Yep.
This is the real deal, and I think this is a massive leap forward for finance in Australia.
Yeah. So it's a collaboration between the DFCRC and the RBA, of course, and it's talking about different forms of digital money, such as stablecoins and the central bank digital coin. They actually outline their objectives as, tokenized asset settlement, wholesale central bank digital coin, and then another aspect is industry collaboration. So, there's a hell of a lot of exciting things.
Absolutely.
That's going to be covered on this project, which Catena's involved. Okay, so we've talked about Catena's role within Project Acacia. We've talked about the 24 participants and some of the novel use cases. There are 5 DLT platforms that are involved in Project Acacia: Red Belly, Hedera, R3 Quarter, Canvas Connect, and EVM networks such as Ethereum. Which network is Catena Digital going to use, and why have you chosen that network?
Well, we would like to use Ethereum for one and Red Belly for another, but we're also having a quick chat with the R3 is down there as well. Now, they have just done a deal with Solana, so we're talking to them at the moment as well.
R3 Quarter?
Yeah.
Okay.
So
why would you select one network over the other? What sort of pushes you into different things?
Well, so there's a slide. If you stand back and you say, what are the advantages of each? So what are the advantages of ETH? ETH is seen definitely as more secure, which is great for big transactions. It is expensive.
Yep.
And one of the problems with Ethereum is it's a bit like Uber surge pricing. You don't know how much it costs until you go to use it. So that's fine for a very large transaction that you want safe, but you don't want to be tapping for your cup of coffee and then find out it costs you $4 to buy the cup of coffee. So if you're going to do lots of little transactions, Red Belly has been rated, I believe, the highest number of transactions per second. It's something like 600,000 transactions per second.
Yeah.
Solana's a couple of 100,000 transactions per second.
Yep.
So if you're doing lots of little transactions, both of them are less than a cent. Hedera's less than a cent. Those are the transactions if you're doing, like, imagine you go to how many transactions Woolworths would do in a week.
Yeah.
6 or 7 million transactions in a week. A busy day on the ASX is 7 million transactions. I don't think you'd want to use Ethereum.
Yes.
And I could be wrong there, but I think you want a network that's fast.
Yeah. We want to be on Ethereum because it's already connected to most of the crypto. It's where all the TVL is.
Yeah.
And DeFi is already established on there. So it sort of makes sense for us to, for the stablecoin to be active in that in that area. And then, the new use cases, for instance, tap and go, Red Belly, Solana, etc.
Absolutely.
So, yeah. Very good. Okay. So what are the economic benefits of tokenizing asset classes in Australia? So I think on the paper, and I think we were up in Queensland, and Lizzie from the DFCRC had a presentation saying we're likely to save somewhere around about $18-19 billion
Well, it's just the start.
a year just on, these tokenization efforts. So, given that there's that forecast out there, how do you see the I guess success from this project, and what does it look like in the future?
So I'll quote some of the numbers. Brad Jones and this is RBA numbers. They see a reduction just in credit spreads by the increased liquidity in credit instruments that will save issuers $13 billion a year. That was just one thing. I actually think that could be larger for different reasons.
Yeah.
But that's just one thing. They also quote between 1 to 4 billion on bid offer, and we touched on that earlier. You look at the bid offer that Jelly C trades when it hops in and out of off chain, on chain.
Yep.
You're paying 50 points, 40 points here. Yep. That will go to 3 or 2.
Yep.
And so just that reduction, that's for everybody. You don't have to be a corporate to access those prices. Retail will be able to access corporate spreads when they use stablecoins, just because it doesn't matter who you are. It's a digital asset. You're swapping it for another digital asset. No credit, no settlement risk. So that's just to start with. Yep. But once you start tokenizing all sorts of assets, houses, cars, the transfer costs on no conveyancing.
Yeah.
You won't have to look up, do the land title search again. Yeah. Right. So I just see a huge, huge reduction in transaction costs. You think about Jelly C, what it costs if someone wants to redeem a unit. You've got to buy it, you've got to close it out. If you can then take that and it's tokenized and then just sell it to the next person that comes into the fund, your costs per transaction will go down by 80-90%.
Absolutely, and it allows us to produce a live NAV.
Yeah.
So for everybody out there, what that means is that instead of just being able to transact in our units in our fund from Monday to Friday during business hours, we can be available 24/7. And the punters out there that are wholesale clients in our that deal in our funds, it's just one click and they're in, and then one click and they're out. Yep. So, functionally, awesome. They have it is unbelievable. They get their cake and they get to eat it as well.
Oh, what's the point of cake if you can't eat it?
I know, exactly. Very good. Okay, so when does Project Acacia start?
Oh, it's effectively started. We're running around talking to all our partners. We went and presented our partners to the RBA and said, this is what we want to do. This is who we're going to do it with. Yep. And that all... on Thursday morning last week, they announced all the use cases. Yep. And who are the leads on each of the projects. So off and running.
And it's good because almost everyone else that's doing it, and it's a good basis to be able to collaborate.
Oh, absolutely. And we've had lots of calls from people also in that saying, "Oh, look, we need a stable coin. Can you come and be part of ours?" So that's been great.
Yeah, that's good. Okay, so on to crypto week.
Crypto week, it's a big deal.
It's a huge week, and I know Manners is sort of looking at the clock, so we're going to move this along.
There's only three things. There's only three things to talk about. 3 bills.
So I mean, there's three. You're actually right. There's 3 things that we want to focus on. So the Genius Act, which was passed through the Senate at a 68-30 vote, moves to the House of Reps. And the Genius Act is an important bill because it unlocks so much going forward. But in terms of Crypto Week, there are three things. Oh,
the second one, the Clarity Act, I think is a big deal. I think that's a big deal too.
Yeah. So we're looking at,
and we want the third one enacted here, but that's very selfish of me.
Exactly. So let's just focus on the Genius Act for a second. What are the key aspects of the Genius Act? I'll just quickly go through them and then we can discuss it. So number 1, consumer protection.
Yep.
So you have strict reporting requirements, including monthly audited reports on their reserves.
Yeah, and don't forget, Circle doesn't even do monthly audited reports. Tether certainly doesn't.
Yeah. My
My understanding is it's only PayPal's stablecoin that would actually currently would conform to the Genius Act if it gets passed as is.
So you're talking about more trust in having that additional protection. Okay, so number 2, we've got the reserve requirements.
Yep.
So it has to be 100% backed by US dollars and short-term treasuries.
Yes.
So short-term treasuries would be 3 months or less.
I would have thought so, but the US trades a 30-year yield curve. Oh, and there's a few longer ones. They term short-term is out to 2 years, but let's see what actually happens. If you look at MICA, European stable coins, you can go out to 2 years. And if you go to Singapore, the MAS says you can go out to 30 days.
Okay.
So it'll be interesting to see where it lands.
Wait for more details on that.
Wait for more details on that.
But
it's pretty important. It'll be very important for, I would say, the decision-making that the Treasury here use when they do their drafting later in the year. They'll be watching.
They'll be looking, won't they? So what it means is no corporate debt or equities. And we know that, for instance, Tether and Circle
no Bitcoin.
Have a bit. Yeah, that's right. Have a bit of that. Okay, so number 3, we're on to regulatory oversight. So by that I mean it is supervised by both federal and state. And if it's below 10 billion, it can be supervised by the state, but if it's over 10 billion, it'll have to be federally.
We will end up with a similar thing here. A small issuer of stablecoins in Australia will be supervised 100% by ASIC. There'll be a threshold, and yet to be determined. But I'm sure APRA will then come in. And I think that's a good thing if it sort of gets above, and it's probably a lot lower than 10 billion. It might be 100 million or something like that.
And then, instead of holding it in a, in a certain vehicle, you may have a little bit more flexibility.
Well, yeah, and look, the whole idea of a stable coin is that particularly for Tether in their format, was that you weren't locked into the, the traditional fractionalised banking. Not such a big deal in Australia. Like we love our big four. They are always seen as pretty safe, but that's not the case in every other country or every other region around the world. So to have your money in a stable coin that's backed with the treasuries of US Treasury, or in Australia's case, with Australian government debt, that's a much better, a safer place than on deposit in a bank where 5% you know where it is, but 95% is lent out to other things, cars, mortgages, exactly. Whatever, business loans.
Yeah. Okay, and number 4, so we're talking about here guidelines for licensing and issuer qualifications. So, i.e., who can actually issue,
Yep.
who can get the license.
Yep.
You want to have a credible person.
Oh, absolutely.
Someone like yourself, Drew.
Very credible.
And 5, insolvency. So the holders of the stablecoin have priority over other creditors for the issuer.
Absolutely.
Okay,
So that money has to be there. So you think about it. If you deposit your money at a bank in the US, you've got the FDIC insurance and it covers you up to X, 250,000. I'm not really sure. Same in Australia. You deposit a NAB, you're covered up to a level. You're not covered 100%. In a stablecoin, the money's there.
Yep.
And you can everybody can withdraw all on one day and the money will be there.
Yeah. Okay. So let's say, for instance, I think there's a 96% probability that the Stablecoin Act, so the Genius Act, will actually pass in 2025. So there's a very high probability. It also seems very likely that it's going to pass this week.
Yeah.
So assuming that it does pass, what are the implications for other countries around the world?
Well, I think this is more the third act that's up for thing is the way the states are looking at stablecoins versus the way Europe's looking at stablecoins, and Australia seems to be a little bit in the middle. So the third act this week is to say that the US government cannot issue a CBDC. Now, Europe's gone down the path of we're going to issue CBDCs, ECB issues CBDC, and there are stable coins, but there is a government-issued CBDC. So that's a very different approach to stablecoins and privately issued, who can actually issue them. And they're trying to do different things, and they're solving for different things.
So let's just focus on that for a second. So if a country does issue its own central bank digital coin, what are the ramifications? Just spell it out for the punters out there.
Look, so if you think there's potentially if you're worried about the banking system in that country, you're going to pour into the government stablecoin. So instead of you're getting your first 50,000 guaranteed, if you go to the CBDC, you're getting 100% of it guaranteed by the government, not just the first 50 or 250,000 guaranteed by the government.
Yep.
If you're in a stablecoin, the stablecoin's money's on deposit in the bank. It's not being lent out for anything. It's on deposit in several banks or it's in treasuries. So that's not being lent out, but it's still helping to support the deposit system of the bank and purchases, which is another reason for the US, purchases US treasuries as well. So it's a new buyer. Stablecoins are a new buyer in that market where they've seen a lack of buyers or a falling number of buyers. Traditionally, the world's central banks have been buyers of US treasuries, but they have been less and less so of late.
Yeah. So can you tell us a little bit about how you see Australia's system evolving? Let's call it 5 years in the future. So Project Acacia has gone through. There's been a lot of lessons learnt. We've tested the central bank digital coin. We've tested the stable coins. At a point down, once it matures in the future, what type of system could we potentially see in Australia with potentially a central bank digital coin on top, for underpinning interbank transactions?
Well, look,
perhaps?
It could be like your ES account, your exchange settlement account with the RBA could be CBDCs, and banks or APRA supervised organisations have access to the CBDC.
Yeah.
But I don't believe it makes sense for a retail CBDC. We're very fortunate in Australia. The payment system here is very, very good compared to going around the world. I was in Argentina last year, and it was the most you could withdraw from an ATM was $25, and it cost you $8 to do that.
Yeah.
So that's not a good payment system. And people, when you tapped your card, the vendor at the restaurant, the cafe, didn't get their money for 40 days. So here we can send money to each other in a minute. So we're very fortunate in Australia. So we don't have the massive need that some other countries do.
Yep.
But I see once things get tokenized, and when I mean things, Project Acacia, it's going to make so much sense to everybody to tokenize bank bills, bonds. The AFM, it just makes a ton of sense for them to issue all of Australia's treasuries on a blockchain.
Yeah.
Then they'll know where they all are. They won't need the banks to ring them up and say, oh, my turnover in your bonds was X, because they'll know what the turnover and whether any of the bonds moved hands, because it's all on a blockchain.
Yeah.
And there's been issues over the last couple of years with banks not reporting correctly, AFM awarding mandates to people who shouldn't have been given mandates because they've falsified their turnover. That all ends on blockchain. So the government's going to go, we need to put it there. I don't even have to worry about all this stuff anymore.
Transparency.
So, transparency. The whole clearing and settlement goes away.
Yeah.
Instantaneous and an immutable record. You know who used to own the bond, who owns it now, and who owned it before them. That's all clear. I'd love to see the ASX come back in. I really feel sorry for the ASX. They led the blockchain charge, and they were just like, in reality, they were on what they call the bleeding edge as opposed to the leading edge.
Yeah.
And
bring back the ASX. Bring it back. Get it back in there. Come on, guys. You want to do it. We know you want it.
And, you know, I just see a forward where all securities are on chain. It just makes a ton of sense to me. So I see that. And, you know, that a stablecoin gets the accounting standards say that that's cash equivalent.
Yeah.
And then it doesn't matter if you've got stablecoins on your balance sheet or fiat on your balance sheet. It's $5.
Yeah. Okay, so just quickly, we're running out of time.
Well, there's one more thing.
Yeah.
The second bill
Yes.
this week is also quite important. It's the Clarity Act.
Yep.
And that says what the SEC can do, what the CFTC can do. And I think that's a big deal too. So it'll be great to see that all sorted out, because we've seen, particularly in the States under the last, under Gensler, that was a lot of what people saw as regulatory overreach and not a lot of clarity between who does what.
Yeah.
Great to see that and say, this is what CFTC does, this is what the SEC does. So I think that will be fantastic.
Okay, we want to bring it back to the punters at the end. And that's, so let's say, for instance, Genius Act gets passed. We're at around about 260 billion in market cap for the US stablecoins. Just quickly, within 2 years, how much can that go to?
Okay. Here will be the big difference. When the Accounting Standards Board says that a stablecoin that qualifies under the Genius Act is cash equivalent, I think they'll go to 30% of M2. M2 in the US is 22 trillion.
That's a big number. Now we're talking.
So $6 trillion of US dollar stablecoins.
Okay, so let's just focus on that figure for a sec. How does that play out in terms of network or DeFi utility? Okay, so I'm trying to give if this act gets passed, here are the networks, or here is the for instance the mega DeFi apps that are likely to benefit from it.
Oh, look.
That's
a tricky one.
Is it Ethereum? Is it Solana? Or is it Aave? Is it Uniswap?
I think it's up to the individual chains. One or two of them are going to benefit like
merge.
You would not believe.
Yes.
I can't tell you which ones. And I would think that Solana's got a great shot. I would think. As you know, I worry about Ethereum.
It's got the biggest TVL.
I know it's got the biggest TVL,
the
but
biggest stablecoin.
AOL had more email addresses than anyone else. And remember, we all use Netscape as well. So that makes
Don't pop my balloon. Come on, what are you doing?
So I'm a bit nervous about Ethereum. But hey, there could be something new that we don't even know. It could be one of the other modular ones. I remember when TIA was all the rage about 18 months ago, when it went from $20 down to $2 or something.
Yeah. So follow the data. That's what you're saying.
Absolutely.
Follow the data.
Follow the data.
The blockchain doesn't lie.
Correct. And that's the whole idea. The blockchain doesn't lie. Follow the data and it will become clear. It could be red belly.
Yes.
Who knows?
We hope. Okay, Drew.
Fingers crossed.
Exactly.
We love red belly.
Thanks for your insights. They've been invaluable. And once again, congratulations on getting the draft AFSL and also being nominated to go on Project Acacia. This is a lot of positive things for Catena Digital going forward. So.
Yeah, it's great for Australia. It is great to see the RBA, Treasury, ASIC, APRA, DFCRC all involved in this. It's great to see institutional Australia backing this because the banks haven't. ANZ to a little bit, but the banks haven't. It's great to see, hats off to Brad Jones up at the RBA.
Yeah. And Menesh, you've been quiet as a house mouse today. It's not like you. What's happening?
Nothing. I've been enjoying the deep crypto discussion.
Very good. Okay, well, that's another episode. Thanks to all the punters out there. We're nothing without you. So have a good week and don't forget to
give us a like.
Yes.